happy Sunday. It's not like there's no birthday today, but I realized that nobody gets anywhere without discipline financially. And so I need to discipline myself birthday wise. And I think leave the celebrations to like three people a month, or what do you think? I think that we are really, really keen on this investment business, and so let's do more business. So today I am going to talk about four different types of investment vehicles. Three of them are considered high risk, not even medium. While the very first one I'll be talking about is a medium risk investment. Sometimes, well, these days, because of the kind of returns we get on it, it has become relatively low risk. But even at that, I would like to say that classifying investments as low risk is not just based on the rate of return, it's also based on the safety of your funds, that is, the volatility of the investment vehicle. So, the very first one I'll be talking about today is mutual funds. Mutual funds is when an entity, a lot of our banks do it, pool funds are investment banks. When there was universal banking, banks could do so much, but when banking did not stop being as a universal, they had to divest into trust companies and investment companies that bear similar names to the bank names. Now, these investment companies and trust companies have pools of funds that they invest in different things. Now, these pools of funds are called mutual funds. Mutual funds are funds from various investors put together and invested in different things. Very, very varied investments. They also have a formula for diversifying. Now, every mutual fund has its own diversification formula. And when you are not just going in blindly, you might want to know exactly what kind of investments your mutual funds administrator puts your funds into. It's extremely important that when you're signing up with a mutual fund, you don't just look for the bottom of the page and append your signature. You might want to know what percentage goes to what. You should really be interested in knowing how your money is going to work for you and how the returns are going to come. Now, this interest would let you know the same way you have decided your risk appetite and decided where you want to put your money, you would be able to tell the risk appetite of your administrator and where exactly your money is going, which would give you an idea of how volatile that investment would be. That is when we're talking about mutual funds. So pay attention to where your money is going to be invested in when it comes to mutual funds. But you have bands of income, bands of funds rather, that you can invest in mutual funds. And the good news about mutual funds is that you can actually start with any amount you have. I know there are some funds that take as little as 5,000 naira to invest in mutual funds. It's a very, very promising scenario for people who don't have so much money but who want to hold their financial future in their hands and start work from wherever they are. These people find solace in mutual funds in that they can build their investments over time. And then you can actually increase your investment in mutual funds over time through the principles we spoke about in relation to your savings. That's separating your savings, automating your savings, and compounding it. So you can actually separate it in that as soon as money hits your account, you can automate the debit of the funds from your account, move it out of your general funds into the mutual funds, and then it's compounded over time. And every time there's a interest, there's returns being paid on the pool of funds you have in the mutual funds, you can actually reinvest it and thus compound the funds there. Unfortunately, the rate of inflation has affected the rates you will get on mutual funds and is not so promising at the moment. But like I said, high returns usually translates to high risk. So if the returns are not so high, it just means that your risks are not so high. But please always bear it in mind that it's better to be safe and earning something than to keep your money under your pillow not knowing if fire will gut the house tomorrow and then you even lose everything without anything coming back to you. At least money in mutual funds is yielding something, even if it's not yielding so much. Now, the very next is the currency market, which is what a lot of our people have been doing in recent times to generate income, which is forex trading. Forex trading is we trade foreign exchange, forex. That's how the name came about. You trade foreign currency, one currency for the other, and then you earn margins in, you sell high, you buy low, and then you make a margin over the sale of currency, foreign currency. That's basically this definition. I will not claim expertise in this area either. I would say that if you want to go into forex trading, please get some training in it. If you are going to give your funds to someone else to trade for you, please know who you are committing your funds to and get some form of guarantees, because we all know that the currency market can be highly volatile. But that currency market is what controls the exchange rate globally. And so it might be a place where you want to play if you want to stay relevant when it comes to what's happening all around the world. True, but please do your homework, investigate before you invest. Right up the alley of the currency market is another currency market that is not foreign exchange, is the market where they sell digital currency, and that is cryptocurrency. There are different types of digital currency out there, and there are different ways the exchange rate of digital currency to actual foreign currency and sometimes local currency differs. So if you are into trading digital currency, which is what we call cryptocurrency, you make margins over the sales of this. Some people want to consummate transactions and they need those digital currencies to make it happen. And then you begin, of course, the most popular example is the Bitcoin. It is actually being accepted for payments in different places now. So the trading of your foreign or local currency for digital currency, just like the currency market, the forex market, is the cryptocurrency market. You make margins on it, you make a killing on it, but the economic challenges out there right now has affected both the forex market and the cryptocurrency market, and people are making great losses. That is why I would say informed risks is what you should take. And no matter what happens, don't forget, we discussed this 2 days ago, you must diversify your investment portfolio. One other big selling market, high risk too, that people invest in is the commodities market. This is where we trade oil, crude oil trading is going on globally. This is where we trade gold. This is where we trade wheat. All sorts of primary commodities are being traded in the commodities market, and people are making a killing from this. Sometimes you can make over 100% returns on your investments. But commodities market, you still need to be careful, as with everything else, because the commodities market, when you hear subsidy, you might not really understand the impact of subsidy. But if you know what agricultural subsidy does to the price of wheat in America and how it affects the price of wheat globally, you would sit tight and understand that government policies can actually drive the commodity market. And you might not understand how dependent Nigeria is on wheat until you realize that all the bread that is being sold daily is from wheat. All the noodles, we have 2 minutes, 10 minutes, 4 minutes, all the different type of noodles you're eating, your pasta, your macaroni and spaghetti, everything is coming from wheat. So we are a huge consumer of wheat, particularly in Nigeria. Now, I want to do a bit of explanation about how government policies can affect commodity markets. With this wheat I'm talking about. Now, when America has a lot of farmers that have grown wheat, and they've grown the wheat in excess of what they will eat in America, the government will buy the wheat off the farmers. And then there will be excess wheat in the global market for wheat. Now, because the government is subsidizing the sales of wheat for their farmers, the government can actually tamper with the price of wheat in the commodity market such that their wheat would come in at a cheaper price, and your normally produced wheat that you have bought, that you are trading, would now have to be sold at a price that is lesser than what you would ordinarily have sold it for, because a particular government has tampered with the price of wheat. I hope we can follow that conversation. If I'm talking about your above your head, I'm really sorry, but I did some training on international trading, and I do know that economic challenges and inflation coupled with government policies can tamper with the prices of commodities in the commodities market. So if you want to go to the commodities market, please do it with somebody who knows what he or she is doing, someone you can vouch for, someone who knows his or her onions. And then the credentials of such people and their track record would matter. At this point, I have said so much already. I think I should stop here, and then tomorrow we'll deal with another aspect of investments. I hope that you have found these videos informative and educative. I look forward to a wonderful time telling you more about investments tomorrow. See you then. Bye.